Welcome back to the Deep Dive. Today, we're digging into some really interesting source materials.
Yeah, we've got the investor presentation and the consolidated unaudited financial results for KPI Green Energy Ltd.
Right, and these cover the first half of fiscal year 26, H1 FY26.
And they paint a picture, don't they? Not just solid performance, but, well, a very deliberate strategy.
A blueprint, almost, for how they plan to hit some pretty massive goals in the renewable space.
Exactly. It looks like a multi-billion-dollar strategic shift underway.
So our mission today is pretty straightforward. We want to cut through the noise, get straight to the key insights.
Yep. How are they pulling off these record numbers now?
While also laying the groundwork for that huge 10-gigawatt vision for 2030.
We're looking for those aha moments, the links between today's success and tomorrow's strategy.
Okay, let's jump right in. Segment 1, the scorecard. All right, let's unpack this H1 FY26 scorecard compared to last year. The growth. It's pretty staggering.
Phenomenal is the word. Not just small bumps. We're talking major acceleration.
So what are the key metrics really showing that speed?
Well, what hits you first is just the scale, the sheer velocity of it all.
Okay.
And crucially, profitability is right there with it.
So give us the headline number. Revenue.
Total consolidated revenue, 12,255 crores for the half year.
Okay, 2,255 crores. And compared to last year?
That's a 77% jump. A massive increase from the 711 crores in H1 FY25.
77%. That speaks volumes about execution, getting projects done.
It really does, bringing them online fast.
And you said profitability kept pace. That growth didn't just come from spending more.
Exactly. That's the important part. Profit after tax paid, that grew by 68%.
68%. So up to
228 crores from 136 crores last year.
Okay. And EBITDA.
Same story. EBITDA also climbed 68%, hitting 449 crores.
So the fact that pay and EBITDA growth basically match each other.
Yeah, almost perfectly.
Even while revenue shot up 77%. That tells you something, doesn't it?
It tells you they've got incredible cost control, efficiency, even during this huge expansion phase.
That's the real nugget there, isn't it? Scaling without killing your margins.
Absolutely.
Okay, talking about efficiency and resources. What about their cash position? Are they building up reserves?
They certainly are. Basic earnings per share, EPS, that jumped a very healthy 47% to 10.8.
Solid.
But here's the kicker on financial health, like you asked. Their war chest, cash and cash equivalents, saw a staggering 168% increase.
Oh, okay. 168%.
Yep. Ended H1 FY26 at 429 crores in cash.
That is a huge jump in cash. So for you, the learner, what does that signal? It means flexibility, right?
Totally. Significant dry powder.
Gives them incredible optionality. They can jump on opportunities, CapEx, major acquisitions, pump equity into new projects.
Without having to run to the debt markets for every single thing.
Yeah. That kind of liquidity seems essential if they're serious about their operational goals.
It is. And those goals are ambitious. Current installed capacity is already over a gigawatt. 1.07 plus GW as of the half-year mark.
Okay, over a gigawatt installed now.
But the real sign of their planning, their prep work, is the power evacuation capacity they've locked down.
The grid connection rights. How much?
A stunning 3.46 plus GW.
So wait, they have grid access for more than 3 times what they've actually built so far.
It's planning ahead, yeah, big time.
And their pipeline, what's actually being built or contracted.
Orders in hand sit at 3.08 plus GW.
Okay, so they're actively working on building out roughly 3 more gigawatts, almost 4 times their current base.
Correct. And all this execution, it's pointed towards that big 2030 target.
The 10 plus GW goal.
10 plus gigawatts, yeah.
Now, hitting that 10 GW number, it feels like that requires a fundamental shift in how they make money, doesn't it?
It does.
Because the current numbers, they show a strong reliance on, well, their existing client relationships. That's their base strength.
Right. If you look at the H1 FY26 revenue breakdown, it's crystal clear.
What's the split?
The captive power producer segment, CPP, that's 91% of their revenue share right now.
91%?
Yeah.
Okay. And the rest?
The independent power producer, or IPP segment, accounts for the other 9%.
Okay, maybe quickly clarify CPP versus IPP for everyone.
Sure. So CPP, captive power producer, that's where they build a specific plant, often solar, to directly serve a large industrial customer under a long-term contract.
Stable, predictable revenue stream.
Exactly. Lower risk generally. IPP, independent power producer, that's where they build larger plants and sell the power directly onto the main utility grid.
Bigger scale potential, but maybe higher risk, and definitely needs more upfront cash.
Precisely. So that high 91% CPT figure shows they're great at building those strong client relationships. Steady business, easier project cycles, maybe.
But yeah, if they're truly going for 10 GW, that 9% IPP slice has got to get a lot bigger.
It absolutely has to become a much larger piece of the pie.
Which means they need access to huge amounts of external financing, big capital.
Which leads us perfectly into their next set of moves, the strategic capital raising and market integration.
Yeah.
Making that leap from a very successful regional player to potentially a national heavyweight.
Yeah. It takes more than just good projects.
It takes institutional trust, it takes really smart market integration, and based on these documents, they seem to be nailing both.
Okay, let's start with that bond issue. The materials highlighted it as historic, right? A national benchmark.
It was India's first externally credit-enhanced green bond.
Credit enhanced. What made it unique?
Well, they raised 670 crore, which is a good chunk of change.
Okay.
But the real innovation was that credit-enhanced part. It was backed by a 65% partial guarantee from Garco.
Garco.
Yeah, they're part of the Private Infrastructure Development Group,
Cool.
funded by several governments, UK, Switzerland, others.
Okay, so you've got this international guarantee basically lowering the risk for the bond buyers here in India.
Exactly. That external backing significantly de-risked the investment.
And that directly impacted the financing terms, I assume.
Hugely. It translated directly into getting a fantastic rating, AA+ CE, from both CRISIL and ICARE.
Double A+. That's a very strong rating.
It is, and that high rating opens doors. Suddenly, big domestic institutions, mutual funds, insurance companies, they can invest.
Right, because they often have mandates only allowing investment in higher-rated paper.
Precisely. So this structure broadens their investor base dramatically, and fundamentally, it lowers their borrowing cost, their WACC, weighted average cost of capital.
Okay, that's critical. Cheaper capital means faster, more efficient growth towards that 10 GW.
That's the fuel, yeah, cheap and flexible capital.
Speaking of big capital injections, they also got a massive nod from the State Bank of India, right?
The SBI sanction, yes, that's maybe the clearest signal of just pure institutional confidence you could ask for.
How big was it?
A massive euro 3,200 crore sanction from SBI's project finance unit.
3,200 crore. Okay.
That's the highest ever sanction the entire KP group has ever received.
Wow. That is a staggering amount of capital unlocked, just like that. What's it earmarked for?
It's laser focused on building out that IPP capacity we were just talking about, growing that 9% slice.
Makes sense.
This money is set to finance over 1 gigawatt peak of solar and hybrid IPP projects, specifically in Gujarat.
Okay, a gigawatt worth of projects funded right there.
Yep, including a 370 megawatt hybrid project and a 250 megawatt solar project. And here's the key stability factor.
Yeah.
Both projects are backed by 25-year power purchase agreements, PPAs, with GUVNL.
The Gujarat State Utility.
Right, so you have that combination. Government-backed financing from SBI and long-term stable revenue locked in with the state utility PPA.
That really lowers the risk profile for those big IPP builds. Makes
It
sense.
definitely provides a solid foundation for that rapid expansion.
Okay, here's where I thought it got really interesting, though. Capital and capacity, fine. But they also got a license. A license that seems to fundamentally change how they can operate in the energy market. What's the deal with the GERC power trading license?
That Category A power trading license from the Gujarat Electricity Regulatory Commission, yeah, that's a strategic game changer.
How so? What does it let them do?
It basically lets them move up the value chain in terms of profitability.
Sure.
It allows KPI Green Energy to directly access the power exchanges like IEX and also participate in short-term bilateral power markets.
So they're not just locked into those long-term fixed-price PPAs anymore.
Exactly. They gain flexibility. They can optimize their revenue by selling power when prices are higher, aligning sales with real-time demand curves.
So if there's a price spike on the exchange.
They can potentially capture that upside directly. More dynamic revenue generation.
And this must be pretty relevant for their corporate customers too, right? Especially those trying to meet environmental goals.
Absolutely critical. Remember that huge 6+ GW pipeline they're building?
Yeah.
This license lets them package and offer flexible, traceable, verifiable blocks of green energy.
Which is exactly what companies need for ESG reporting.
And specifically for meeting their renewable purchase obligations, their RPOs.
Right, the mandate requiring them to buy a certain amount of green power.
Correct. So this license makes KPI a much more versatile and, frankly, valuable partner for any large consumer needing to meet those green energy mandates efficiently.
Okay, so that 10 GWO goal, it's not just about more solar panels. You mentioned diversifying.
Right. You can't just rely on solar forever, and you have to deal with its intermittency.
So where are they placing their bets for the future? What are the next big growth segments they're targeting?
They're strategically moving into the four key areas. Looks like hydrogen, BES, floating solar, and even offshore wind.
Okay, quite a spread. Preparing for a post-solar world, maybe.
Seems like it. Green hydrogen looks like a major focus area.
What are they doing there?
Well, on a smaller scale, the KP Group is developing a 1 megawatt captive green hydrogen plant planned for FY26.
Okay, a pilot project.
Yeah, but the bigger vision is international. They've partnered up to potentially establish a massive 100,000 tons per annum green ammonia facility.
100,000 tons. That's serious scale. Who are the partners?
They signed an OU with Jeonbuk Province in South Korea and strategic partnerships with AHES Co. Ltd. and GH2 Solar Ltd.
So positioning for export markets then. Green ammonia for shipping fuel, industrial uses.
That seems to be the play, thinking globally about future energy demand.
Makes sense. And for stabilizing the grid today with all this renewable energy coming online, batteries must be part of the plan. BESS.
Oh, absolutely vital. Battery energy storage systems, BESS. When you add so much intermittent solar and wind, you need storage to smooth things out.
So what's their move there?
They've signed MOUs with Delta Electronics India, a big player.
Okay. For what exactly?
Collaboration on BESS solutions, but also tying into green hydrogen again, and interestingly, EV charging infrastructure too.
Ah, a broader energy transition partnership.
Exactly. It's crucial for them to manage the grid impact of their own rapid growth. They need storage solutions.
Okay, let's shift gears slightly to operational efficiency. Managing, potentially 10 GW of assets that requires some serious tech.
Definitely.
Did anything jump out in the materials about how they're managing costs and performance on the ground? Any tech surprises?
Yeah, actually. What stood out was their commitment to developing tech in-house, proprietary innovation.
Oh, like what?
They actually developed their own specialized solar panel cleaning robot.
Really? They built their own robots?
Yep. They've already deployed over 730 of them across their big utility-scale plants.
Wow. And what's special about them?
They use a waterless dry cleaning method.
Ah, that's huge for arid regions like Gujarat. Saves a precious resource.
Exactly. Extremely sustainable. And the whole fleet is controlled remotely through a cloud-based system.
Very smart.
They're so confident in it, they've actually applied for a patent. Shows they're serious about leading with internal tech.
That's fascinating. It's not just a gimmick that directly impacts OpEx, operational costs, and keeps panel performance consistent, especially somewhere dusty.
Right. And tying all that physical efficiency together is the digital backbone.
Their control center.
Their Network Operations Center, or NOC. It's built on IBM Maximo for renewables.
Okay, using IBM's platform.
Which enables true real-time monitoring, immediate fault detection, predictive maintenance across their entire growing fleet.
So they can spot problems instantly.
Pretty much. In fact, IBM actually recognized their NOC in a global case study, called it a benchmark for digital operations in renewables.
Okay, so they're building not just the physical assets, but the world-class digital systems needed to manage that massive scale efficiently.
That's exactly right. Preparing to manage what will soon be a world-class volume of power generation. Hashtag tag outro.
So let's bring it all together. What does this deep dive really mean for you, the learner? It feels like we're seeing a company firing on all cylinders, but on two different timelines simultaneously.
That's a great way to put it, yeah. They are executing flawlessly on their current business model, that CPP segment, delivering really spectacular short-term financials today.
Right, record numbers now.
But at the same time, they're laying this incredibly sophisticated groundwork, financial, operational, technological, for a radically different, much bigger company tomorrow.
Exactly. Those record growth figures, undeniably impressive, fueled mostly by that stable CPP business right now.
But those big strategic moves we talked about, the innovative green bond cutting their capital costs, the huge SBI sanction bankrolling over a gigawatt of that riskier but higher growth IPP build-out.
Yeah.
And getting that power trading license to play in higher margin short-term markets,
Right.
that all signals a very calculated plan. They're positioning to capture the next decade of green energy expansion, moving beyond just CPP.
We've seen that huge transformative 10-plus GW target for 2030.
Yeah.
So given that they currently rely on the predictable captive power producer segment for 91% of their revenue,
Right, the vast majority today.
the big question, the final provocative thought for you to chew on, is this. When do those big bets pay off? Those strategic investments in IPP, in green hydrogen, in BSS, how quickly do they need to execute on those complex new ventures for that 10 GW ambition to truly reshape their core business, their revenue mix, over the next, say, 5 years?
It's a real strategic high-wire act, isn't it? Balancing today's reliable profits with this massive, somewhat riskier vision for tomorrow.
The speed of that transition, that shift from CPP dominance to a more diversified IPP and future tech player, that feels like it will define their entire next decade.
Couldn't agree more.
Thanks for joining us for the deep dive.
Catch you next time.